My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to the West Coast of America. I'll be one of my friends just trying to make some money. My job, not just to entertain, but to educate, teach you, put it in context. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. Today, we had so much good news that it was almost overwhelming, at least until we heard chatter that the White House might keep its tariffs on Chinese goods for another 10 months, at which point the averages strangely gave back their gains. Dow closing up just 33 points, S&P declining 0.15%, Nasdaq dipping 0.24%. But there's a lot going on here, and I think leaving the tariffs on until China actually follows through with its promises, since they double-crossed us so many times, makes a ton of sense. It should have caused a rally, not a sell-off. But maybe it was some sort of weird, mistaken reason to take profits. First, though, it's worth considering just how much good the trade war may have accomplished in our country in a pretty short time. Tomorrow, the United States and China will sign an historic agreement. The Chinese have agreed to buy $200 billion in goods and services from us in exchange for our government agreeing to hold off on more tariff hikes, roll back half of a 15% levy on other products, though those rollbacks might be months away. We're still keeping tariffs on $360 billion worth of Chinese goods, and China has allowed its currency to become much stronger. In exchange, we're no longer accusing them of currency manipulation. But China has a strong currency that makes their exporters a lot less competitive. So for everyone who told us that the Chinese Communist Party was playing the long game, that there was no way we could win and we would get nothing, well, how'd that work out? Because to me, this looks like a huge victory. Now, I don't call $80 billion in manufacturing orders over a couple of years nothing. I don't call $50 billion in energy orders, $35 billion in services, $32 billion in digital agriculture purchases nothing. Let me put it to you this way. If you come out a year ago and predicted we get all these concessions plus a pledge to open their markets to American financial companies while we kept most of the tariffs in place, well, I would have told you that was inconceivable. As I've been saying all along, China needs a trade deal far more than we do, and that's why we're getting such good terms. If the Chinese government lives up to its promises, I'm betting a whole host of companies will get major earnings boosts. For example, our manufacturing sector has dwindled so much that it's hard to think, well, where the hell will China be able to find $80 billion worth of manufactured goods? But there's one quick way to spend that money. They could place orders with Boeing. No wonder the beleaguered aerospace stock rallied today, despite some revelations about how Boeing insiders disparaged Lion Air's management as idiots for wanting more pilot training, not long before the tragic 737 MAX crash that killed 189 people. Boeing, it needs all the help it can get right now. Their orders are awful, the worst in decades. So some major Chinese purchases, perhaps of other planes that are available, would be just what the doctor ordered. Caterpillar and Deere, two of our heavy machinery makers, well, they could use that business too. How about energy? Now, we got a surfeit of fossil fuels coming out of the Gulf of Mexico, particularly natural gas, and it comes out as multiple liquefied natural gas export terminals that ship the LNG all over the world. And you know what? Much of the world is desperate for natural gas, for our natural gas. China especially. That seemed like a pretty easy call. Agriculture, remember the Chinese are having a major pork shortage. Covered that yesterday when we talked about Zoetis. So I'm expecting Tyson Foods to fly once China starts making these purchases. The African swine fever outbreak means they don't have a choice. People have to eat. How big a deal are these orders? We're getting brokerage recommendations to buy the railroads, because of all this stuff needs to be transported to the coast before it can be shipped to China. Just so you know, I prefer Union Pacific, the old one up, because they have the direct routes to the major ports in Southern California. Okay, so what about the flip side of the trade war? Everybody told us that slapping big tariffs on China would push up all the cost of all sorts of goods here, because that's what tariffs are for. They make imports more expensive, so domestic producers can afford to raise prices. Except that hasn't happened. It's actually kind of stunning. It's certainly different from what I learned in the 70s when I went to school. Today, we got the consumer price index for December, and it was up only 0.2%, thanks in part to declines in used cars and trucks, household furnishings, and airline tickets. Meanwhile, the categories where I was most worried about inflation, apparel, come on, we import all that stuff, shelter, commodities, it barely registered. Okay, I know this is a little outrageous, but to me, it seems like maybe the country's got its cake and it can eat it too. So then why do the averages get back their gains? Once we heard the chatter about the tariffs staying on until after the election, the media settled on a narrative, the mainstream media settled on a narrative that there's no path forward for a phase 2 trade deal on top of the deal we've already just negotiated. Now, listen to me. Also, they felt that coupled with the fact that the market had gotten overbought, that's what I think caused the averages to roll over. But you know what? What's important here? I think that worrying about the path forward is like worrying about the next game when your team has just won the darn Super Bowl. The timeline here is not what's important. Don't buy into that. What matters is that President Trump won't roll back the tariffs until China follows through with its promise to buy $200 billion worth of stuff for us. To me, it sounds like, I don't know, it sounds like Reagan, trust and verify with the Russians. Away from trade, we got our first big earnings reports from Delta Airlines, Citigroup, JP Morgan, Wells Fargo. 3 out of 4 were astonishing. Delta reported a magnificent quarter, bolstered by robust U.S. travel that was far better than we expected. Sure, the company benefited from the fact that all those grounded 737 MAX planes have curbed airline capacity, allowing them to raise prices. But after those numbers, the stock was simply too cheap for words, trading just 8 times next year's earnings estimates. Delta CEO Ed Bastian called it a terrific holiday season when he was interviewed by our own Phil LeBeau. Then JP Morgan and Citigroup gave you monster good quarters. JP Morgan posted 7% deposit growth, 3% loan growth, still had strong net interest income despite the decline in the Fed funds rate. That wasn't supposed to happen either. I don't know how this is. A plethora of good news. Hey, by the way, speaking of China, I think the newfound certainty that came with the deal and the trade truce, led to a spike in trading. People stopped sitting on their hands, which helped JP Morgan deliver this giant upside surprise. If anything, Citigroup's results were even more impressive when you consider that this is actually the cheapest of the major bank stocks. Citi had excellent growth in all lines, especially credit cards, up double digits. The company's also voracious about buying back its stock. They've now retired roughly a third of their share count over the last few years. Fly in the ointment? Wells Fargo. And one look at their pathetic results makes it clear this company's suffering. It's not spending enough, perhaps because of the management turmoil. JP Morgan's been able to take market share left and right in this country because it's invested heavily in technology and service. Wells Fargo is lagging behind in taking new accounts, and that's another reason why its stock got hammered. They got to spend a lot. They got to get their act together. Charlie Scharf, new CEO, he's got his hands filled. Now, even though we got a lot of good news, the market couldn't sustain this morning's rally. Again, stocks were overbought, meaning we've come up very far, very fast. But the statistics from these banks show a robust consumer who's still spending within her means. That's an encouraging backdrop, especially if we're headed into some short-term sell-off after a remarkable run. One last positive, the endless rally in the overheated FAANG stocks, on the same old price target bump, price target bump, price target bump news finally seems to have run its course. I say hallelujah. It's good. These stocks need to cool down. Meanwhile, the banks and the airlines have been stalled for a while, and that's how they were able to run on positive stories. Bottom line, if today's afternoon pullback turns into a full-blown decline later this week, you need to remember that a sell-off would be a terrible thing to waste. So many companies doing so well. I'd love to buy them, but at this point, only on weakness. Let's take calls. Let's go to Spencer in Florida. Spencer.
Booyah, Jim.
Nice, Spence. What's up?
So I called a couple of months ago, and at the time, I wanted to start a new position in 5 and below. And it was trading for around 125 at the time.
Right.
And he told me to wait for a pullback. So I got in around 118. And with the stock tumbling again yesterday, I was wondering if I should buy more or wait for another pullback.
Hold off. The stock did bounce today. I do expect it to come back down again tomorrow because a pre-announcement does not allow a stock to come back instantly like this. But it's going to be a great long-term situation, which is why it didn't fall even more than it did. Spencer, okay. How about John in California? John.
Booyah, Jim. We love you out here in Sacramento. How you been?
Oh, John, always good to hear from you. What's going on?
Okay, I'm thinking about getting back into the infrastructure play. Saw some hard hats next to Trump. What do you think of U.S. Concrete?
No, that's a total show-me stock, and so far it hasn't shown me. If you want infra, you buy Caterpillar. All right, look, if we get a sell-off, please don't waste it, but hands sit on them until we do. Man Money tonight, coming to you from CNBC's One Market in San Francisco. Nice day out. Dexcom pre-announced results yesterday at the JP Morgan Healthcare Conference. What does it signal for the stock, though? I got the exclusive. Then, have we gotten too complacent? You know I care about this, so I got to go straight to the empirical data in tonight's Off the Charts. And it's the end of an era for Medtronic. Omar Ishrak is stepping down as CEO. Omar, I sat down with him at the JP Morgan conference to talk about his tenure. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.